Well, Carlos, it's really nice to be here at Amsterdam and to see you again in person. We're here this week. We're to talk to a lot of clients about a lot of what's going on. And Brazil is in the news about tax. So tell us, what's going on?
Indeed, it's very good to be here to get to meet our clients, KPMG partners from all around the globe. And indeed, Brazil, there's a lot going on. There are a lot of hot topics. Certainly, the first one is the implementation of the new TP regulations in Brazil, which finally will harmonize Brazilian rules to OECD type of rules. As you may know, Brazil historically had, let's say, a very unique set of rules that were very specific for Brazil, and that the business community has always asked for a change so that Brazil could somehow have the same rules that we have elsewhere. So it's been approved in the lower house. It's only pending approval from the Senate. With our perception, it's that it's going to happen. So, clients and companies are discussing how to adjust, how to get ready and prepared for those new rules. So, indeed, lots of things going on. On top of that, we have a new government in Brazil. There has been discussions about having a tax reform on indirect taxes in this first semester and a tax reform on direct taxes on the second semester. So it's not, let's say, ready or concrete as the TP regulations, but it's something that might happen, and it's something that our clients are concerned about.
So those are three big things: transfer pricing, indirect tax, and direct taxes. And so coming back to the transfer pricing one for a moment, your view is that that's coming into force. It's a question of when. Yeah. Do you have any feel as to when that's likely to be?
Soon, very soon, because again, this was actually introduced by the government at the end of last year. It's been approved by the lower house already, and now the Senate is about to vote. They have a time frame to do that, but it should happen in the next weeks, I would say.
Oh, so very, very, very soon, which doesn't give people a lot of time to start thinking about what to do. It's been replacing the transfer pricing system for Brazil. And then talk to us a little bit about indirect taxes, because that ends up being the second thing that businesses really have to fight through in Brazil, given the complexity of the indirect tax.
Yes, absolutely. I mean, Brazil is known for having a complex indirect tax system. We have multiple indirect taxes at federal, state, municipal level. There's always been, actually everyone acknowledged that the system must change. So business communities, all stakeholders, the government. So everybody believes that, the system cannot remain as it is. It's just too complex. It's not good for business. It's just it has always been quite tough to get consensus, because by having the whole idea is to replace all those indirect taxes by a single VAT, as you have in most places, right? But the thing is that it's difficult to get consensus, because that would mean that certain, let's say, governments like the state and municipal level would have to give away taxing power. So that has always been the struggle. But now it seems that, there might be a way to reach a consensus on that.
Nice. Is there any sort of time frame for that type of reform?
No, there's no, let's say, a defined time frame, but clearly the new government is willing to make it happen. The new Minister of Finance said that they are pushing for the bill to be analyzed and approved by Congress. There's still a number of things to be, let's say, negotiated and discussed, but, it could happen this year,
Interesting. And then you mentioned direct tax reform as well. What's the thinking in that space?
Yeah, the thinking is basically that, the government acknowledged that Brazil has a high corporate income tax ranges compared to other countries, and especially if you consider in the previous years, there has been somehow this race to the bottom, and Brazil has a 34% corporate income tax rate. So it's in the high range, I would say. And the idea, of course, is attracting for investment, is attracting investments in general. So there is this view that we should lower our corporate income tax rate. But on the other hand, the government cannot really afford to lose tax revenue. So what they are considering is to reintroduce a dividend withholding income tax. We are one of the few countries in the world that doesn't have a withholding income tax on dividends under domestic law, and it's been like that for decades. So the idea is to lower the corporate income tax rate from 34 to maybe something around 20%, but then there would be introduction of a dividend withholding income tax, and that of course changed the rules of the game for every company operating in Brazil, tax planning and also cash extraction, so it could have a significant impact on our clients.
So I'm really had a chance to talk to you, because those are three big things: moving to an OECD-style transfer pricing system, potentially reforming the thicket of indirect taxes into a unified VAT system, and then a potential reform of the corporate tax system with a lowering of the tax rate twinned with a withholding tax. You're going to be a popular man this week.
Yeah, so it's good talking to you.
Good talking to you.
Indeed.
Okay.